I now recognize myself for 5 minutes. Ms. Romero-Rainey, you testified this morning that when banks fail, a speedy resolution is critical, which fully agree with, and you had said that the FDIC should not, quote, pick winners and losers. I would contend, and many of us over here who lived through what happened with SVB and a few other recent bank failures, is that they were lacking in that area. They did, in fact, pick winners and losers, and we saw that scenario play out. And not only was former FDIC Chair Marty Gruenberg slow to react to the failures of Silicon Valley Bank, we heard that as chair of the Oversight and Investigations Committee, we heard that time and time and time again from people who were involved in it, both Silicon Valley Bank and Signature Bank. When it came to the First Republic, he allowed their assets to be purchased by a large U.S. bank rather than rather than putting it out for bid and really having a reinforcement of the competitive nature of the banking landscape. And I want to know, are there ways that you think the FDIC specifically could improve the bidding process that would include everybody in that failed bank assets when those unfortunate occurrences happen?
Yes, and I appreciate the question. I think there's many ways for us to examine what is required under least cost resolution that in time of a failure would ensure that, one, we're not simply allowing the largest banks in this country to grow even larger, that we're taking into account the unique needs of the communities and the customers they serve, and looking at the concept of least cost resolution to be defined over a period of time, not in just that singular moment. So this is something we would welcome engagement with the committee on.
Do you believe community banks have the ability, and are they in a position to absorb the assets of banks like this?
Absolutely, and I think as we reflect on these situations, there were many examples of smaller banks that were willing to bid, that again, if there were more flexibility and a willingness to look at least cost over, again, an extended period of time, multiple banks with unique ties to those communities could have stepped up to the plate and ensured a better resolution for those customers.
In 2018, this committee passed, on a bipartisan basis actually, some relief to those community banks. And yet we still have some who are saying that we need to regulate you all as we would a large SIFI bank or other large banks. Can you help the committee understand how Congress can build on the tailoring requirements that were as part of Senate Bill 2155 back 6-7 years ago, and how it helped revitalize the banking sector?
Tailoring is critical for a viable future where community banks thrive.
And that's because they're just different risk profiles.
They're different risk profiles. And the concept one size fits all is not what we need when it comes to bank regulation. The risk model that is a community bank is succinctly different from those of the largest banks.
So some want to call that rolling back. Others would call that maybe common sense application, right? If you have different type of animal that we're dealing with, it's appropriate to then have different regulations on them, correct?
That's correct. For a smaller community bank that's focused on ensuring the success of that community thrives, that risk profile is going to look completely different, again, from the larger institutions.
Ms. Marshall, I want to turn to you here. In a recently released survey of the Conference of State Banking Supervisors, community banks listed regulations as one of their chief external risks. Is that what you're seeing in Arkansas and among your other colleagues?
Yes, sir, absolutely, and I appreciate the point to the sentiment index survey that in our community bank survey where regulatory burden is highlighted as one of the #1 risk facing institutions. And when I go out and visit with my banks, whether it's in Western Arkansas or Eastern Arkansas or my colleagues across this country, I can assure you that is top of mind for them.
So I think I know the answer to this, but you wouldn't say that Senate Bill 2155 actually caused these previously mentioned banks to fail?
No, sir.
Okay, I didn't think so. Just wanted to make sure we were on the same page here. Ms. Marshall, Ms. Owen, I want to follow up on comments from Chair Hill about de novo banking. My home state of Michigan, we currently have 79 chartered banks, which is down from 86 just a year ago. That represents nearly 2,000 branches, 50,000 employees, and $314 billion in customer deposits. Ms. Marshall, your testimony highlighted just how hard it is to form a new bank. I'm hearing that same message from back home. So what can we do, the consequences, what's going to be the consequences? My time is expiring, but very quickly.
I think
if you
the
could
message
answer.
around tailoring is appropriate and get away from process-driven examinations.
Great, thank you. And I know we have a title of making community banking great again, but ultimately it's all of our goal to make sure that credit is available and through access, whether it's credit unions, you all, those are those communities that really where the rubber hits the road. So with that, I recognize the gentleman from California, Mr. Sherman.
Gentleman yields back. The gentleman from Michigan, Mr. Huizenga, is recognized for 5 minutes.
Thank you, Chairman Stile, and I do just want to extend my congratulations to you as well, becoming chairman of the Digital Assets Subcommittee and having been the former chair of the Capital Markets Subcommittee where a lot of these issues were housed. I know this is complicated and well-deserved, though, on your part, but also congratulations to Chair Hill for seeing that we needed to break this out. I think this is a very positive thing, so I look forward to working with you all. Mr. Garrison, Mr. Yahim, let me start with you. Digital asset market participants have rightfully criticized the lack of predictability and certainty. And going back to 2019, SEC Chair Jay Clayton actually attempted to provide some clarity by releasing a framework for investment contract analysis of digital assets. But we've just seen and just exited the last 4 years where former Chair Gensler famously told crypto firms to come in and register, whatever that meant exactly. They provided very little direction or way for that to actually happen. Instead, it seemed that firms received was a threat of enforcement for doing so. Is it fair to say that the SEC has thus far not produced desirable or discernible standards for digital asset ecosystem that facilitate consistent application of the rules? Mr. Yahim, Mr. Garrison.
Congressman, thank you for the question. That's absolutely true. There's just been a complete lack of policy making, and it's been a regulation by enforcement regime using a decades-old jurisdictional test to try to shoehorn the diverse set of digital assets in the market into the securities laws.
And let's just be clear, regulation through enforcement is the bad thing, right?
It is a bad thing.
Okay. Sometimes some of my colleagues and friends don't always see it that way. They just think that that's another tool in the toolbox, but that lack of predictability, I would think, would be very harmful.
It's been in stark contrast, Congressman, to, we've watched in many major markets around the world a constructive policymaking process where jurisdictions have crafted definitions, passed legislation, passed regulation. We're in the implementation phase. It has been the exact opposite experience here in the United States.
Yeah, Mr. Garrison, I want you to answer this part. What must be done to ensure consistent guidance regarding the classification of digital assets?
So I think the SEC needs to take a deep breath and start afresh on its guidance. The 2019 guidance that you mentioned, while well-intentioned, has over 60 factors and no way to actually weigh the different factors. That's simply not actionable. There's
I think good news is Acting Chair Ueda is seemingly doing that, taking a very different approach. One of his first was to rescind the Staff Advisory Bulletin 121, SAB 121, followed by the creation of a crypto task force headed by fellow Commissioner Hester Peirce. So additionally, we've seen the SEC pause some of their pending crypto-related enforcement actions, citing a desire for potential resolution. Mr. Kim, beyond these examples, what other actions could the SEC pursue as far as low-hanging fruit to improve its approach in digital asset regulation that Congress could legislate?
Thank you very much for your question. First of all, I want to just reiterate that it's been so encouraging for the industry to have the SEC Crypto Task Force and the new SEC leadership welcoming and willing to work with the industry. In addition to pausing or withdrawing enforcement actions based solely on registration violations without any allegations of fraud or egregious conduct, it's clarifying some of the issues that the industry has been requesting. What is a security? Clarifying and confirming that a stablecoin that is backed one-to-one US dollar denominated is not a security, and just continue to work with industry. The industry wants to work with our regulators to make sure that we can enhance clarity and provide for US leadership.
I've got about a minute left. I want to try to hit a couple of quick things, but Mr. Yahim, in 2023, the SEC went after Kraken's staking program. You operate in over 200 countries, is that correct?
That's correct. Yeah.
Okay, that's a fair number. Being a member of the Foreign Affairs Committee, I know that constitutes much of the known digital world on that. But did any other regulator around the world shut you down as former Chair Gensler did?
No, Congressman, and I think, to put our global operations in context, in those jurisdictions that have advanced clear rules of the road, we've worked with regulators to put those in place, and we are regulatory compliant. There are a lot of jurisdictions that haven't, and markets operate on a verse solicitation basis, but most of our business is across North America and Europe, where we see regulation moving forward.
My time has expired, but I will put a question into you all about whether U.S. lawmakers should be concerned what Europe was first out of the gate with some of their regulations and their framework, and what lessons can the U.S. learn from MiCA. So with that, Mr. Chair, I yield back.
The gentleman from Michigan, Mr. Huizenga, who also is Vice Chairman of the Full Committee, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and Dr. Cohen, good seeing you again. It has been a while. I was around first time you were in, but the Federal Reserve System, there's been a lot of talk about the dual mandate. It actually is focused on 3 key monetary policy objectives: maximum employment, price stability, and moderation of long-term interest rates. Somehow that seems to get sort of forgotten. I'm going to ask you a too high, too low, or about right for a response to this question. Are interest rates right now too high, too low, or about right? Dr. Cohen.
So I don't have a judgment on what
Okay.
the right level. They
All right,
embody people's
I
expectations.
don't have time for an explanation. Do you
Okay.
think they're about right?
They're about right for what people expect.
Okay. Mr. Wang.
Today, the 10-year yield is about 4%. I think that's about right.
Okay. Dr. Michel.
Sure. I have really no idea, and I don't think they do either.
Okay. Mr. Kozel.
They're slightly restrictive, which I think is appropriate given inflation right now.
So too low.
Slightly too high.
Too high. Slightly too high.
Appropriate,
Okay.
but higher than they
All
should
right.
be in the long run.
Great. So I wasn't here for the creation of Dodd-Frank 2010. I got elected in 2010, but I've been living with the echo effects of it ever since. I believe that today the Fed has even more power, more influence, and more control over our financial system than ever before, while improvements, as Dr. Cohen, you had said, have happened in transparency, partially because of the push that came out of this committee. It does, I believe, remain shrouded in mystery to most of the American people. And frankly, we're not talking about groundbreaking stuff right now. I mean, these are things that we talked about over a decade ago, and we were asking many of the same questions. How could the Fed be more transparent to Congress and the American people? How could they communicate its policy choices better, and then direct in the direction it was taking so that consumers and investors could make informed decisions about today and the future? Dr. Michel, let's start with you. You noted and cited a paper by economist John Taylor, one of my favorites, titled Monetary Policy Rules Work and Discretion Doesn't. As you know, Dr. Taylor became famous for the Taylor Rule, which essentially has a suggestion of guides how central banks could adjust interest rates to stabilize economic activity. I had suggested when Chair Yellen was in here that she could create the Yellen Rule. It didn't really matter what it was, but were there some rules that were published? Now, everybody says, well, we do this behind the scenes, but the problem is it's behind the scenes, and nobody really knows what they are doing. They're seeing a guessing game. So could you explain to the committee, Dr. Michel, how something like the Taylor Rule or the Yellen Rule or any other rule could have impacted the Fed's decision during the most recent economic downturn?
Sure. If we go by the standard, any of the standard rules really that are accepted by macroeconomists, then in that case, yes, rates are too restrictive at the moment. If they had been following a rule, at the very least, we would know what they're doing and why they're doing it. And by we, I mean you guys, Congress, and I think that's the most important thing. There's no way to judge how good or how badly they're doing because you don't really know what they're doing.
Okay.
And that's why a rule is
Would
important.
something like the Form Act,
Yes.
which had been a piece of my legislation, would that be a good starting point?
No, I think that's a perfect starting point because it provides what we call a flexible rule. They put a base rule in place, they can pick the rule that they like, and they can stick to it until they don't, as long as they explain to Congress what they're doing that's different and why.
I'm running out of time, so I'm having to jump around here a little bit. Obviously, the Fed now sets rates administratively, partly through interest on reserve balances, and there's significantly more reserves in the system now. I don't want to put words in Dr. Cohen's mouth, but it almost sounded like you said it doesn't really matter what the reserves are. And what I need to know, though, is has the Fed incentivized financial institutions to hoard reserves instead of putting capital to work for the real economy?
I think the liquidity regulations put a premium on holding liquidity, and they need to look carefully at that as to whether they're over-incentivizing holding liquidity. I don't think they are. It's important for financial stability. So I agree that there are adjustments, Mr. Wang said, to the leverage ratio that could be made that enable banks to intervene more aggressively in stabilizing the Treasury market, and that would be helpful. For example, exempting reserves from the leverage ratio.
Okay. But time has expired. We may be following up with some written questions. I yield back. Thank you.
Gentleman yields back. The chair now recognizes the gentlewoman from California, the ranking member of the full committee, Ms. Waters.
For 5 minutes. Well, thank you, Mr. Chairman. And Mr. Chairman, I see Mr. Chopra has surrounded himself with like-minded activists. And I quite honestly never thought I would pine for the days of Richard Cordray to have some reasonableness injected into the CFPB. But the CFPB's unique structure prevents Congress from conducting meaningful oversight. I know this because last session I was chairman of the Oversight and Investigation Subcommittee, and I know too well the roadblocks and speed bumps and, frankly, brick walls we ran into with the CFPB. A single director who has no accountability, no boundaries, limitless funding, and will go and push the accepted and legal bounds of their organization is a recipe for disaster. And I think that's why we've seen this one agency be challenged so much over its own existence and its actions. And unlike other agencies such as the FDIC, the Fed, the alphabet soup of all the regulators who paused their rulemaking after President Trump was elected, Director Chopra made the very conscious decision to continue to push forward on rules that he knew would be unlawful and overturned. And you saw it with the overdraft, you saw it with medical debt. He was the one regulator that decided to not put his pen down and allow someone else to make some of those decisions. So, Mr. Pomerlin, in your written testimony, you called the Bureau a, quote, a political lightning rod and that can have, quote, radical pendulum shifts depending on who occupies the White House. And it just seems, my observation would be, it seems most of the time when it's the Republicans that they come in and say, hold on, we've gone too far too fast, let's just stop in place while the Democrats just continue to blow through these legal bounds. Anyway, the idea of converting them into a commission structure isn't a new concept. I've been here for now, this is my year 15, and I think for 15 years this has been a discussion because there's a recognition of the dangers of this structure. So what advantages do you see with changing that structure?
Well, I mean, we're at a critical point in time, right? There's an inflection point here where we can make the Bureau more credible, more durable going forward. We believe that a 5-person commission, a bipartisan commission, would allow for the aforementioned dissent and debate that was required to actually form the policies, taking some of the political ideology.
Which is the structure that virtually every other regulator, SEC, others, they all have internal checks and balances, not CFPB.
CFPB does not.
Is it important to have industry experience when you're leading this?
We believe so. I mean, it's good to have the background of industry and how products and services actually work. Oftentimes they're misunderstood.
Okay, well, so this is a structure that Mr. Barr and I have talked about. Do you believe that the CFPB can and will actually still protect consumers with this new structure?
I believe so. The CFPB has a statutory required duties that it has to carry out. I don't think having a commission structure is going
So
to...
wait a minute, just because we've changed president doesn't mean we've automatically thrown out consumer protection? That's what we hear from the other side.
That's correct.
Okay, I just wanted to clarify that. That doesn't seem to be the narrative. Okay, well, basically, essentially, enforcement has become arbitrary. The current Bureau sends a signal to industry that the Bureau will let you know when you've violated the law or harmed consumers because they've given themselves that broad authority. Not that Congress has, not that anybody else has, but they now suddenly are, through enforcement letters and other things, they are bending the will of the law to what they view as what is proper. And by the way, CFPB can't actually give a clear, consistent, definitive definition to the term abusive regarding unfair, deceptive, or abusive acts of practice. So is there anything that is considered abusive that is not considered unfair or deceptive?
That is unclear at this point.
It would seem like a layman would actually be able to discern that, but we're talking about legalese, right?
Without the guidance from the former administration under Director Craniger, we do not have a definitive definition of abusive.
Yeah. All right, and I've got a few seconds. Ms. Fonseca, I'm sorry, I'm running out of time, but community financial institutions are often caught in crosshairs, and we know about the cost of compliance. If the CFPB has its way, and I'd like to take your answer in writing if I could, but if the CFPB has its way, what would the cost of eliminating and reducing overdraft products have on consumers that you serve? And I look forward to having that answer in writing, so thank you.
Okay, thank you.
Gentleman's time has expired. The gentlewoman yields back. The gentleman from Michigan, the vice chair of the full committee, Mr. Huizenga, is recognized for 5 minutes.
Thank you, Mr. Chairman. I know this is the Subcommittee on Digital Assets, Financial Technology, and Artificial Intelligence, but it feels today like it's the Committee of Ironies and Befuddlements. First irony is that Gary Gensler, while he was head of the CFTC, declared that anything that was digital was clearly a commodity. Now, he should know, he's the smartest guy dealing with crypto assets that he knows. But then again, when he became chair of the SEC, suddenly everything magically turned into a security. Now, you have to understand, Washington likes to declare things either fish or fowl. You know, we want very clear lines on things. Turns out that crypto assets is actually more of a platypus. It's got a lot of characteristics, and it depends on where it is as to how it should be regulated. Mr. Chairman, the second irony in all this is that it seems to me that the Center for American Progress is rather ironically named, since it doesn't seem very progressive on this. I got to tell you, nothing says progress like a, quote, cautious approach to that stops short of pushing into new frontiers. The third thing, Mr. Chair, is that some here on this committee believe it's far better for the general public and America writ large to do nothing, to sit back and just watch the realities of the world pass us by. Now, how dumb can we possibly be? We know that these are issues that we have to address. Now, I'm going to get to my questions, and I actually changed my question based on our subcommittee ranking member's insinuation in his opening remarks that the crypto industry was, quote, writing their own rules. So, Mr. Werrett, Ms. Smith, Mr. Sierra, do you believe that that's the case? I mean, if you guys are writing your own rules, you're doing a terrible job at it. Because Ms. Smith, you mentioned in your comments about a patchwork of regulations that exist across the country. And if an industry, it just seems to me, if an industry was writing its own rules, you guys would have your act together. Or are you actually asking us to get our act together? I'm curious, Mr. Sierra.
I think this Congress has a real opportunity to pass legislation that will address the core issues that everybody here cares about, which include consumer protection and the ability of crypto founders and entrepreneurs to be able to keep this technology here at home.
Ms. Smith, I'm going to kind of move on to this a little bit, but feel free to answer that about writing your own rules, but I'm going to roll it into this. I mean, the SEC's response to digital assets often have resulted in using enforcement measures against many of the companies that you have worked with, some 100 in total, I believe. So I'm curious, can you describe a few of the rulemakings that came out of the Gensler SEC that, and what were their impacts on the digital asset ecosystem?
So during the Gensler SEC, there were a number of rulemakings that happened to mention digital assets. So it was a broader topic. So for example, they covered the definition of exchange. The purpose was to modify the rules with respect to the treasury markets, but they also mentioned digital assets and their implications for DeFi protocols. That rule was proposed but not finalized. But had it been finalized, commentators to that rule mentioned that it would have resulted in them going offshore because DeFi protocols, as the name suggests, do not have a central intermediary that can comply with compliance requirements.
So sticking with you, last week during our debate on stablecoins, I said that Congress and regulators should recognize the unique nature of these innovations and establish a regulatory framework that targets the activity and not the technology. Can you describe the importance of Congress using rules for the custody of crypto assets in legislation that it moves?
Thank you for the question. So with respect to custody, the rules anticipate that there's physical custody, meaning there's a paper asset. That is obviously not the case for digital assets. And so the rules need to incorporate how you can have good custody, meaning possession or control of an asset that only exists in digital form.
Thank you. And Mr. Ware, I have my last 30 seconds here. You noted in your testimony that your company develops software for blockchain infrastructure and aggregated networks. Does the importance of the underlying technology, which you described in your testimony, get lost in this kind of debate?
The technology is important. Self-custody is crucial to decentralized blockchains, decentralized protocols. It's the entirety of it. And it would be great if this committee could protect that right to own property and to control one's own property on-chain.
I yield back.
The gentleman from Michigan, the vice chairman of our committee, Mr. Huizenga, is recognized for 5 minutes.
Thank you, Mr. Secretary, for being here. And I just have to note that it's ironic that this has been declared a no filibuster zone by the same people who walked out of a hearing yesterday in filibuster. So, and just to give you one quick brief moment, are you saying that there was no unauthorized or unsanctioned persons that had access to the systems that you are in control of?
Again, there were 2 employees.
Yep.
There were very strict guardrails, and they were there for an ERP function.
Yeah, so they were authorized and they were sanctioned.
Yes.
So not unknown, and Elon Musk wasn't one of those 2 people?
No, to my knowledge,
Okay.
Mr. Musk has never been in the Treasury building.
Okay, all right. I have to hit on Burma and a little crypto, and if we have time, China. So I want to thank you for your actions that Treasury took this past Monday regarding Burma. The KNA, the Karen National Army, has become a haven for transnational criminal organizations that run illicit operations such as human trafficking and smuggling. The group has strong ties to the Burmese army, which has targeted religious and ethnic minorities such as the Rohingya since the civil war broke out in 2021. While the U.S. and our allies continue to impose sanctions against the military junta, unfortunately, the atrocities continue. My district, the 4th District of Michigan, is home to approximately 5,000 of these ethnic Burmese. And I'm just asking you, we need to do more to protect the people of Burma and to stop the genocide. Yesterday, I reintroduced the Brave Burma Act, a bipartisan piece of legislation that would require the president to determine on an annual basis whether to impose stronger blocking sanctions against the Myanmar oil and gas enterprise, the Myanmar Economic Bank, and foreign persons operating in the jet fuel sector of the Burmese economy, which has been a tremendous amount of their revenue. And it further limits the junta's ability to borrow at the IMF, which I think is one of the issues that the chairman was touching on. So these actions would target the heart of the military junta's revenue. So can I get your commitment that you're going to continue to work with my staff and us on a bipartisan basis as we try to address these issues in Burma?
Congressman, we're happy to work with your staff on this legislation, and thank you for your leadership on this issue. I share your concern about imposing consequences on persons who threaten the peace, security, and stability of Burma. Treasury has the tools to continue to take action for the people of Burma, and working with you, we will continue to do so.
That's great. And what's frustrating is while some of these sanctions have been put in place, a sanction's only as good as the willingness to enforce it. And we have seen them receiving financial support, the junta, from around the world, especially, frankly, as they ramped up production during the last administration. So I'll note it's not just Burma, it's places like Iran, that this illicit activity that has gone around the sanctions has been allowed. In some cases, Treasury has granted these licenses. I sit on the Foreign Affairs Committee as well, and we see this all the time. I want to touch on crypto. Yesterday, as I had mentioned, the committee held a hearing with House Agriculture, or attempted to hold a hearing with the House Agriculture Committee. Turned into a very important roundtable as well regarding digital asset market structure reform. So can you quickly explain how important it is for America to take the lead here, especially as we see China leaping ahead?
Yes, sir. We believe that the United States should be the premier destination for digital assets. And as members of this committee and the Senate are attempting to do, create good market structure around that, so that U.S. best practices are used around the world.
And that's really the point, right, is having American U.S. best practices to sort of set the pace for others to follow, rather than us trying to fill in the holes that others that may be created as others set that pace.
Yes, sir. And also that digital assets are an important source of innovation that will drive that can drive usage of the U.S. dollar around the world, as with stablecoin legislation. There is speculation that there may be up to $2 trillion of demand over the next few years for U.S. government securities from digital assets.
My time has expired, but I'll send you my question regarding Chinese debt trap diplomacy. So with that, I yield back.
The gentleman yields back. The gentleman from New York, ranking member of the Small Business Committee, Ms. Velasquez, is recognized for 5 minutes.
Mr. Chairman, I want to raise.
With that, Ms. Lake, I will be recognizing myself. I recently held a subcommittee hearing on the State Department's censorship industrial complex, which was previously in the business of silencing American voices overseas and at home. Thanks to a thorough investigation and review by Congress and the Foreign Affairs Committee previously, and President Trump's leadership, that bureau is no more. Building off of that work here today, you've spoken extensively about the importance of telling America's story and standing up to censorship. In your view, what should be the mission of the U.S. Agency for Global Media going forward? Moreover, how can we ensure its position to effectively promote American values and counter propaganda from authoritarian regimes like the Chinese Communist Party?
Well, we definitely need to bring some huge changes to this agency. I believe that the agency should be eliminated, and then we should pull out the things that are of value. And VOA, Office of Cuba Broadcasting, we need to look at what works. And what works is telling America's story abroad. What doesn't work is being anti-American, telling the CCP propaganda abroad on our airwaves. And we need to modernize. I don't think doing 1990s television is effective anymore. People just aren't, that's not where they're getting their information.
What do you think some of the most important stories and tenets about America that need to be told that haven't been getting told?
I think that just the history of this country and what this country is about, our freedoms, our liberties, our Bill of Rights.
Maybe the founding of our country.
The founding of our country, yeah. And especially this year with 250 years
That would seem to me a pretty big story to tell. I mean, that seems like
one of the things that's
something that the rest of the world's going to pay attention to.
And one of the things that's statutorily required is to talk about all 50 states, including the beautiful parts of our country, all 50 states and tourism. Those are things that are actually in
By
the statute.
that, I'm sure you mean Michigan.
But
So I
Michigan's
appreciate
beautiful. One of my favorite states. I'm a Midwesterner. I was born there. I was born in the Midwest. So we haven't been doing that, and we're trying to do what's statutorily required. Unfortunately, they've gotten into the habit of hiring foreigners to tell America's story. And if you were born in another country, you don't know our history, you don't know our culture, in many cases you don't know our language, how do you effectively tell America's story?
That's the right question to be asking, and now we're looking for that solution of how to do that. I think there's growing consensus that America needs to do more to push back against authoritarian propaganda and censorship around the world, particularly from communist China, but other places as well. I have a specific example from Southwest Michigan. I happen to represent a significant Burmese population in my district, many of whom with family and friends still subjected to the authoritarian military junta's role in Burma and their rule there. Many of these people have relied on Voice of America Burmese service to expose the malign activities of the CCP in its manipulation of the Burmese military junta, and oftentimes drive a more profound skepticism of Beijing's intentions. We were just having a dialogue with my colleague about the statutory languages and that kind of thing. Would it make sense to have flexibility to say, okay, let's surge in an area? You were talking about in a newsroom surges to where the information is. Wouldn't it make sense to have some flexibility to say, okay, you know what? Burma is a place that we need to be paying attention to, and so and move some of those assets around.
Absolutely.
But I'm curious, what role do you see organizations like USAGM, and you were just talking about possibly eliminating them, playing in the global information fight? What reforms do you prioritize to ensure that we're winning the battle? That's the most important thing.
Well, for starters, I'm going to prioritize making sure that we're getting out information that is not anti-American. That would be very disastrous, and we've done that in the past, and we don't want to do that anymore. And I'm going to work to make sure that's not happening. But you're right. We need to search. There's no expiration date on anything in the government. If we are working to see to it that people of an oppressed nation are getting information, to know there are options out there, to know that there's a better way, and then when that nation is no longer being oppressed, we continue to operate there. It just doesn't make sense. But what they've done over the years, 84 years, is expand, collecting more languages, covering more languages that we don't necessarily have to be covering. One of our success stories is Office of Cuba broadcasting directly into Cuba and getting into the ears and the hearts of the people of Cuba. But there will come a day where I believe there will be freedom for the people of Cuba. And then do we need to still continue to broadcast in? That's a question that needs to be asked. So we should have expiration dates when it's mission accomplished. It doesn't mean we continue to pour tens of millions of dollars more into it.
I appreciate that. My time has expired. With that, the chair recognizes Ms. Jayapal from Washington for 5 minutes. Gentleman's time has expired, and I'm going to recognize myself for 5 minutes. Mr. Regas, there's been a lot of speculation and motivation projected onto you personally, the State Department, certainly the administration. Explain to us, what is the purpose of this fiscal and personnel realignment? In your words.
Well, thank you for that question, Congressman. It's to align the mission of the department with the core function, with what its original core function is, which is conducting the foreign policy and diplomacy of the United States government.
And are you saying that maybe we had gotten out of focus on some of that?
I think so. I think some of that started in the post-Cold War environment where we didn't have that Soviet threat anymore, and so a lack of focus led to sort of an expansion of offices and issue-specific areas that it was sort of a department looking for a mission, looking for a function. I think it's pretty clear we're back in an era of great power competition, and I think that's focused the mind and focused our intentions back to engaging in real diplomacy.
Yeah, many of us up here questioned the role of USAID in pushing not aid, but philosophy and actions onto a lot of countries. And I'm assuming that this kind of reform is intended to enhance transparency, enhance efficiency. Anything else it's trying to do?
Yeah, and centering the mission, empowering our diplomats. Most of the work that's been consolidated, the offices that have been eliminated, have been to take those functions. The functions themselves haven't been eliminated, or at least the functions that we want to keep have not been eliminated. They've been moved.
As you were pointing out with the office with trafficking, correct?
Yes. They've been moved to the regional bureaus, right? And to the posts overseas. So our ambassadors who are in those countries where, say, human trafficking is occurring, or the regional bureaus where it's a big problem, they are now the ones who are empowered, who know these countries best, and who are in the best possible position to take action.
Is that why we put ambassadors in place?
That is why we put ambassadors in place.
Okay.
They have the title plenipotentiary because they are the chief ranking official in that country representing the President of the United States.
Well, welcome to Washington, which always believes if 10 is good, 100 must be better, and frankly, 1,000 must be essential.
Yes.
So I think we're seeing this disruption of this notion of just adding to budgets and adding to FTEs. Somehow that means a better product, or certainly that the interests of the United States are being brought about in a better manner around the world. And I mean, that's clearly not been the case, correct?
That is correct. Yeah, and you see even some of the most successful and iconic American companies out there, Facebook, Microsoft, Google, they've laid off people. They do it all the time. And it's not because they don't have the money to pay for it. It's because those offices or those functions aren't doing what they need to be doing, and they need to focus on their core mission.
Not to mention $36 trillion in debt. So I'm going to move on, though. I'm going to take on a personal issue. This has been of particular interest to me, that following the Biden administration's disastrous withdrawal from Afghanistan is the treatment of our Afghan allies. Again, these are Afghans who have risked their lives and their families' lives to serve alongside the U.S. Armed Forces for years, thus saving countless American lives along the way. I know the chairman has had personal experience on this. I've said this on many occasions, that we must uphold that sacred commitment that we've made to them, and I believe these brave Afghanis who have undergone rigorous vetting processes that have been required and properly and so are welcome into my neighborhood and my state anytime. Can you give me a quick update on the status of the U.S. Department of State's Office of Coordinator for Afghan Relocation Efforts, CARE?
So yes, we're continuing to process those requests for folks who want to get SIV visas. I believe we have $500 million from the prior year that we've deemed sufficient to continue operating that effort going forward into FY26. We've admitted, I think, 1,200 folks under that program since the beginning of the administration. And the functions of the CARE office have moved to the regional South Central Asia desk. Again, this is part of how we're empowering the regional bureaus and the ambassadors to take care of the diplomatic work in their countries and in their regions, the people who are best positioned to know those areas best. So that work is continuing.
All right, my time has expired.
Thank you, Chairman. I now recognize the Vice Chairman of the full committee, Mr. Huizenga, for 5 minutes.
Thank you, Mr. Chairman. You're going to hear a central theme on this. I leaned over to Chairman Davidson when he finished, and I said, that's virtually exactly what I had written down as my question. I was just going to use slightly less pejorative language when it comes to central planning, but I think that's a lot of the question, concern, feedback that I think not just from colleagues, but from taxpayers that we hear, which is, why are we making these investments into an industry that isn't needed? Well, you can't predict war, right? Well, you can't predict mass war or a conflict like what was happening in Russia and Ukraine. And I want, Mr. Faxon, you did a phenomenal job explaining it from your perspective on what was sort of the ramp up in the need. Mr. Fallon, I'd like you to maybe expand on that or give us your take as well. I mean, you talked about perceived risk, that really this is sort of, in a way, the government funding might be that bell cow, as some might say, right? That it's others are going to follow that. They're going to view that as a lead. Oftentimes, though, when we are doing our appropriations, we want to see end of fiscal year production. We have a much different timeline than you might have. And I'm really curious, do you believe that the programs that we have, one, allow you to build the capacity for not just an immediate, but for long term? How do we maintain that? Two, do you have the flexibility to innovate and explore within those programs? And one of the sort of the central themes of a truly free market is the ability to fail and learn from that failure. We don't like that when we're sending taxpayer dollars. We don't want to see failures, but are there enough places where you can take lessons learned and apply it so that we do have a stabilized production base?
Yeah, thank you for that question. It's a great question. I'll start with the last piece first. In terms of the ability to fail, I think when you use DPA Title III dollars to support development, then it allows the government to partner with industry as they're developing the product, as we're understanding what are the risks and challenges that it takes to bring that product into full production. And then we can kind of navigate that together as we learn and come up with solutions to solve problems that invariably come up through the development phase. So I think DPA allows us to partner in that phase versus if we were doing it on our own dollars, we'd be trying to figure it out on our own. And sometimes the government can have solutions or resources they can bring to bear to also help in those situations.
Yeah, let me interrupt you super quick on that. I mean, this is called the Defense Production Act. So I think that makes a lot of sense to people when it's defense related. Are we focused enough with the DPA right now? Is it really into that defense mode, or have we wandered away from that core objective?
Yeah, so my personal experience is primarily with DPA for defense, so I can't comment necessarily on the percentage of funding that they make outside of defense. I would say that my experience so far is that it is focused on the priorities of the administration of the DoD. So in our case, like we're working on these critical munitions that I think we've heard talked about as a priority from the other folks in their earlier testimony. So I feel like it is focused in areas that are important. I think could it be improved? I'm sure it could. What I would say is in terms of, does the funding support ramping up to actually support the rates? What happens if volume changes? How fast can you change? I would say one of the advantages of additive is it can ramp up very quickly. It doesn't require like big mega foundries in order to scale it up. You're basically buying things that look like inkjet printers, right? They're bigger, they're more industrial, but they look kind of like that. In terms of timing, in 15 months, we can double production. So right now we have the ability to make about 2,000 engines a year. In 15 months, we'll ramp that up to be close to 5,000. And then another 15 months after that, we could be ready to support close to 10,000, which is what we've been given by the DoD as a target. So again, you compare that to 100 years of manufacturing things conventionally, and we can make 2,000 a year, right? So it's really promising, I think, what it can offer. The other advantage of additive is it's easy to distribute. What that means is once you have a design and once you've kind of validated how to manufacture it, there's 3D printers all over the world, right? So in a time where there's you need a surge, we can take the design, we could export it to a DoD facility or another industrial facility, and they could make the design from our design just by putting it in their printer. It's a pretty automated process. You don't need a lot of specialized labor to do that. So it's pretty easily scalable. And the other big advantage is, a lot of conventional manufacturing requires very bespoke, expensive, long lead tooling, right, in order to make a part. The 3D printer doesn't care what it's printing. It can print keychains one day and print jet engines the next day. It doesn't care, right? It doesn't have a memory. It's not targeted for anything specifically. The other advantage of that is as priorities for the DoD change, we can change what that capacity is being used for, right? So Beehive has picked this mission because this is a big priority for the DoD, and we think it's probably the area where additive manufacturing is most fertile. But as priorities change, the capacity could change with the priorities to support what's being needed. Thank you.
Is now recognized.
Hey, thank you. I was going to say Chairman Hill, but Chairman Barr. I know Chairman Hill's got a markup. Mr. Chairman, I do have to at least address one thing. My family business, third generation sand and gravel operation, was brought up, and I guess I would just note that I'm glad I'm not a publicly traded company and not subject to a bunch of ESG woke activists from California coming in and trying to tell me how to dig dirt. But not every company has that same fortunate position. But I do want to thank the committee and Chairman Hill for continuing to highlight the abuses that happened under the leadership of former SEC Chair Gary Gensler, who allowed and frankly encouraged activist investors to hijack the shareholder process and push a social agenda that ultimately harmed publicly traded companies and their investors. By some estimates, under the Biden-run SEC, these environmental, social, and political proposals grew by almost 60%. I'm proud of the work of the ESG working group, as you had just noted, and what we had done, and many of the issues that, exact issues that we've talked about already today were explored by that committee. Lastly, I think it's crucial that the committee continue to explore and hold the proxy advisor firms accountable. The outsized influence of Glass Lewis and ISS have harmed the shareholder process. These proxy advisory firms bear none of the consequences their recommendations have, and have even fought against exact proposals when it applied to them that they encouraged to be applied to other publicly traded companies. They operate without sufficient transparency and have become the de facto standard settlers for corporate governance policies in the U.S. And as chairman, I was happy to see them testify before our oversight committee last Congress, and I think we should continue to hold them accountable, encourage them to be more transparent, especially as they navigate conflicts of interest in the firms that they supposedly serve. Mr. Copeland, I want to start with you. A lot has happened since the first time you came in front of our committee in 2016. The issue of proxy voting and shareholder proposals has become somewhat of a political football, to say the least, as shifts in policy have flipped back and forth. How has the volume and nature of the shareholder proposals changed over the past decade? And are you seeing more proposals focused on specific social or political issues? And have we been able, through our work here in Congress, have we been able to maybe curb some of that and influence the impact of those?
Well, the short answer is the volume's increased significantly up until this year, and we've seen a decrease this year. I do think that the
regime change, I think it happened.
I think the regime change, and from the SEC going from 14L to 14M has made a difference. But in terms of how these have been received, I mean, certainly as Mr. Mueller sort of talked about in his opening statement, we've seen up until recently, a substantial uptick in the number of social and environmental proposals. When I started tracking this 15 years ago, there were still a fair number of them, but they were a much smaller percentage. The other
it's
thing
really exploded.
Yeah, and when I first testified, it's not the first time I testified in front of this committee, but on this subject matter specifically in 2016, I could say no shareholder proposals ever gotten majority shareholder votes over board opposition at the Fortune 250. That switched shortly after that in 2017, and you started seeing more of these, and that reflects the change in voting pattern from the voting advice from the proxy advisory firms and voting pattern from the big three. So
passive index investors have been brought up or at least alluded to, and they seem to have scaled back some of the support for ESG proposals. However, the proxy advisory firms can swing approximately a third sometimes of those types of votes. As a committee, we've discussed bills such as the Index Act and My Empowering Shareholders Act as a solution, which would, I think, de-emphasize their influence. Should large brokerage firms continue to move towards empowering individual investors?
Yeah, I think that's a good idea. I don't think the uptick is going to be huge from it. So I do like something like the mirror voting that the Index Act that Senator Sullivan originally introduced does on that. I explained it more in my written testimony and in the paper I wrote last year that I.
We'll follow up. And Mrs. Keel, I want to, last moment, I'm going to have to follow up in writing. I wanted to know, resource-wise, the impact that these proxy advisory firms have on the SEC. And we'll submit a question. I want to talk about Toyota in particular.
Gentleman's
So with that,
time has
I yield back.
expired.
Gentleman yields back. The chair now recognizes the gentleman from Michigan, Mr. Huizenga, who is also vice chairman of the full committee, for 5 minutes.
Thank you, Chairman Lucas. I got a lot to cover, and I'm going to jump right in. Mr. Pollack, good seeing you again. I'm going to start with you. This past summer, you wrote an article entitled, "Could the Fed Stop Its Huge Losses by Not Paying Interest on Its Deposits from Banks?" Well, you certainly didn't bury the lead on that. So at the time of the article, you noted that the Fed's operating losses had reached, as you put it, I believe, a mind-boggling $234 billion. Can you explain briefly how the Fed got to this point and how they are essentially running a negative balance?
Thank you, Congressman. Of course, the losses keep going. They're up over $240 billion now and rising. They come basically because the Federal Reserve built a balance sheet that looks in important measure like a 1980s savings and loan institution. That is to say, they invested extremely long at extremely low rates, and they borrowed extremely short at what looked like low rates at the time and became normal rates. 4% is a normal short-term rate. 6% is a normal, historically speaking, interest rate. And the Fed is simply upside down, just like the savings and loans were, so they have a big negative net interest margin, negative net interest income, and hugely negative net profits, and negative capital.
Well, I'm assuming that banks would not be real happy if the Fed stopped paying on those excessive reserves. But is there a financial risk to the economy because of the Fed's current position?
There is a risk to the economy through the deficit because the Fed's losses increase the deficit and increase the government debt, which we are all worried about. If the Fed stopped paying interest on reserves, of course the banks would be unhappy. The Fed determines how many reserves there are in the aggregate. In the aggregate, banks must hold the amount of reserves that the Fed creates. And that would be a huge loss to the banking system, to be sure, and would result, I feel quite confident, in a credit inflation as they tried to get out of their reserves.
All right. I've got about 2.5 minutes. Dr. Huizenga, good seeing you again as well. And I understand that research has long held that consumers would rather have an economy undergo massive unemployment instead of experiencing surging inflation, according to some studies. I'm curious if you believe that is the case, but last year, research from the Federal Reserve Board economists also found that Americans are willing to accept higher unemployment if it meant low inflation, suggesting Americans are willing to trade an increase in the unemployment rate by up to 0.6 or just a little over half a percentage point to lower inflation by 1 percentage point. To put it in context, in order to lower Biden inflation from its June 2022 peak of 9% down to 2%, Americans would have to accept an unemployment rate close to 8%. I have a hard time believing that that would be the case, but would this be evidence that Americans have long preferred the Fed to prioritize fighting inflation rather than employment? I mean, what's your take on that?
Well, the exact trade-off, I don't think exists in any polling data, but I think it's clear that people have a tremendous distaste for inflation. It's an economically destructive phenomenon, and when we reached 9.1% inflation in June of 22, the overwhelming unhappiness of the American public was visible to everyone, and the Fed took steps to reduce it. it is interesting that in doing so, when Chairman Powell announced the strategy in Jackson Hole, he made the point that they were going to focus on inflation and exclusively inflation. They were going to turn into a single mandate Fed for that period because there was no way to get back to sustained employment growth without returning inflation to the 2% target. So the whole point of that exercise was not to impose a trade-off on Americans, but to give them better employment and better inflation outcomes.
Do you think there is an appetite or a willingness to accept that trade-off?
I think that the American public will accept hardship in the interest of national gains, but the issue for the Fed is how, over long periods of time, not for any particular episode, to deliver both price stability and good employment outcomes, and that's the issue that should be focused on, the average performance over long periods.
All right, I appreciate it. My time's about ready up. Mr. DeBay, I'm going to send you a question about housing and the Chicago Fed's district, which includes my congressional district. So with that, Mr. Chairman, my time's up. I yield
Gentleman
back.
yields back.
The vice chair of the full committee is recognized for 5 minutes.
Thank you, Chairman Stile. Dr. Lau, we're talking about sandboxes. Do you have anything? I know have been commenting on this in the past. So do you have anything additional thoughts that you would like to?
Definitely, we are we are actually participants in the Singapore AI sandbox that they've set up, the AI Verify Foundation. And it's actually been working exceedingly well in the sense that these types of government agencies, they need to bring the latest technologies to actually evaluate the latest risks that are emerging with AI agents and new AI technologies. And so by bringing in innovative technologies to do that type of red teaming and testing, they're able to stay ahead. Think about here in the US where we have regulatory agencies that are still being educated about the technology, whereas in Singapore, they're able to unleash a lot more in terms of AI potential through bringing in new technology to test and evaluate it. So I think there's a lot of benefits there. And also to the point that Congressman Lynch mentioned around scalability, red teaming is a very labor-intensive problem, right? So you have thousands of tests that enterprises have to perform. If the federal agencies can provide more guidance and tooling around that, it's going to accelerate AI adoption.
Okay, that's helpful. Thank you. Staying with you here, we often hear of an AI arms race with China that, if lost, would threaten U.S. national security and the United States' global economic dominance. In your opinion, is the United States currently? How are we currently faring, I guess, in this arms race, and are we failing at it? If so, how? And more importantly, how can Congress and the U.S. government writ large ensure that the United States outpaces China in the AI space?
I think there's been different paradigms emerging here. One is where you have a federal government that can choose and pick and invest in winners in this space versus creating an open marketplace where different, say, large language model providers or vendors can compete within this marketplace, right? And I think what we're seeing when we talk to folks within the DoD or Department of War now, we see actually a movement towards opening up these marketplaces where many different vendors can compete and the best solution rises to the top. Again, I'll move back where actually evaluating which are the best solutions for use cases that is going to drive America's national security interests really comes down to, can we do the right evaluation of those large language model providers or vendors? And so combining open marketplaces that foster innovation, allow different folks to compete, and then we get to choose the best ones for our use cases is absolutely essential here for us to be competitive in this arms race you're talking about.
By the way, I deeply appreciate how you are succinctly wrapping up some very complicated and detailed things and allowing me 2 minutes yet to ask other questions. So that's important up here when we only get 5 minutes. Mr. Gorfine, I want to talk a little bit about the impact of U.S. regulation and how it may threaten the use of AI in financial services space. You know, we had the SEC's predictive data analytics proposal under the Gensler SEC, I believe would have had some significant impact. You know, are there other things like that that we need to make sure that we're aware of and avoiding?
Yeah, so I appreciate you raising the predictive data analytics rule. I mean, that was rescinded, and I think that was an example of a
rightly so, but
rightly so.
As we saw with that SEC chair, he was expansive in his pursuit of covering every territory you possibly could.
Right, and I would agree, it was not technology neutral, and that should be kind of a guiding principle. It had incredibly broad.
So it should be tech neutral.
Absolutely should be technology neutral. And importantly, like the soft power too, and the way that regulators communicate to the marketplace is important. So with the predictive
Oh, in other
data-
words, you don't want to be pounded into the ground and threatened with being put out of business? That doesn't foster innovation?
That can be a challenge.
Allow the sarcasm to be mine, so that's okay.
That can certainly be a challenging environment. I think especially when you're talking about smaller firms, and when I think about regulatory messaging, it's the small firms, it's the community banks that don't have large armies of compliance teams that are able to parse certain types of messaging that comes from regulators, so it can serve as a big deterrent to adoption.
In the last 30 seconds, how can these smaller community financial, you mentioned community banks or credit unions, how can they use AI to compete?
Well, so I'm a big believer, and I say this in my written testimony, in standard-setting organizations, like industry-driven standards that regulators can effectively recognize or even create safe harbors would allow small firms to know that if you're compliant with these best practices or standards, that is, from a diligence perspective, a route you can pursue. And I think that exploring those types of models in the U.S. is going to be critically important. I realize
Yield back.
time.
Thank you.
Gentleman yields back.